He has over 25 years of rich and diverse experience across the financial services domain, from equity, commodity, currency, and insurance broking, financial planning, training, wealth, and portfolio management to the exchange business. Prior to joining MCX, he's held several CXO level positions in various financial services companies and exchanges. A passionate writer and speaker, his articles on finance and markets regularly appear in various media. He is regularly invited to speak or moderate at various industry events. He has imparted intensive training programs to leading banks, fund houses, and insurance companies. Well, I would take this opportunity to welcome Mr. Rishi Nathani again and give us overview of this index futures, especially the Bullion Index. We call it as BULLDEX, and take this session forward. Over to you, Rishi sir.
Thank you, Muttappa. And thank you, Tejas, and all at FYERS for having us here, for organizing this event with us. It's indeed a pleasure to address all of you regarding commodity markets and especially Bullion Index futures. So first I'll talk about commodity markets in general, and then I'll come down to Bullion Index futures. The reason being that commodity markets are more or less an enigma for many people. And the reason why is that people, for anything, you need to spend a lot of time, energy, and effort to understand it. And commodity markets being a later entrant into the exchange space is slightly less understood, also due to the fact that earlier we were not under SEBI. So the commodity markets came under SEBI, the regulated exchanges under SEBI in 2015 September. And thereafter, we've seen phenomenal growth in the commodity markets, both in terms of products and participants. In terms of products, earlier we only had futures, then we had options on.
Is there a glitch? Can you hear?
I guess so. Yeah, I guess there is.
I think so, from his end.
Okay.
I think, Muttappa, you can take it forward until he comes back.
Okay, well, just to reconnect with you guys again, I think Mr. Nathani is having a small technical glitch. What he was trying to basically tell us all about is that the way the commodity markets have grown up over the past 14-15 years. I think for the last 14 years, we never had any other options other than futures. So now after SEBI's been regulating, they've opened up the markets. We have options coming in fact from 2017. Then they allowed mutual funds, then PMS services to be into this markets. Well, all these things, if you just have a look on this, the ultimate objective of the regulator is to get as many as participants basically into this market. So all of us understand that as many participants, as the increase into these markets, the depth of these markets basically increases. Once the depth is increased, it will be easy for anyone to basically enter as well as exit into the markets. I think the ultimate function of any exchange is to give an opportunity to the retail investors or to the institutional participant or to any kind of stakeholders in this kind of playground, is to ensure that everyone is comfortable in their own trades, whatever they've been doing. To be talking specifically about Bullion Index now, I think we've already had a session on this some time back, a month and a half back, and well, if I have to go through that again, well, fine. Now, ultimately, all of us understand that an index basically it acts as a barometer to measure the ultimate functioning of any exchange. Mr. Nathan is back. I don't think. Yeah. Okay. Well, Now, when I say it is a barometer, now you have your equity indices like Nifty, you have Sensex. Basically, you have more than 4,000, 6,000 stocks which trade under these exchanges. But if it has to be index basically tells the healthiness of the entire market. How a particular, for example, you have a bank Nifty, right? It tells you like how your own country's banks are performing, how is their growth, what is the kind of NPAs they have, what is the kind of performance they could show in the future. So similarly, if you look at commodities as such, once SEBI allowed us or gave us a formal permission to launch indices on commodities, we have started with the Bullion Index. So Bullion Index, as the name suggests, you have both gold and silver. So ultimately, we have given weightages to both gold as well as silver here. Okay, so gold generally would have around 2/3 of the weightage, and silver would have around 1/3 of the weightage. So how these weightages were given? So ultimately, the weightages were given on two basic parameters. One is the kind of liquidity what these commodities have, have gone through the past 12 months. That means like what was the kind of liquidity has been seen in gold and silver. So that has been given as the 75% of the weightage, and 25% of the weightage is basically given to the production value. So all of us understand that no, we don't produce both gold or silver here, right?
I'm back. Please go on.
You're right. Okay, sir.
Sorry,
Okay.
sorry for that glitch.
Yeah.
Please go on. You complete, then I will start.
No, I just gave them an introduction about. I just finished
Okay.
them telling. Okay,
Sorry,
what is
guys.
weightage? Yeah.
I got booted out. Anyways, so I was talking about. I'll start from the beginning. That commodity markets, ever since SEBI came in, we've grown. We've got many new products and participants. In terms of products, we've got, first we had futures, then we had options on futures and options on goods, and then now index futures. And now I'll be talking about index futures today in more detail. But before that, I'd like to dwell a little bit on the commodities as a general asset class. So like when we have a meal, you will have various items in your meal. So you only won't have sambar or rice or anything. You'll also have some vegetables, some pickle, and some other items. Similarly, in your portfolio also, you need to have various asset classes in order to make it more interesting, and also to reduce the risk of your portfolio by so that the standard deviation or risk of the portfolio comes down. So similarly, like you have equities, you have fixed income instruments, you have insurance products, you have real estate. Similarly, you should also have commodities. Adding commodities in your portfolio reduces the risk of the portfolio, because commodities has an inverse relationship to equities and bonds. So when periods of bullishness in equities and bonds, you might see commodities playing catch up. But when equities but they might move in the same direction, but never in the same intensity. And especially when equities and bonds are down, commodities will do well. And when equities and bonds are doing very well, then commodities may not do well. Right now may be an exception due to the extreme liquidity scenario globally. But otherwise, if you see in the past, it has always been proven that commodities has a very, very strong inverse relationship to bonds and also to equities. So in that sense, it's very important to hedge your portfolio against markets ups and downs. Also, commodities are a natural hedge against inflation. So when you have inflation, what is inflation? It is nothing but increasing commodity prices. So whenever you add commodities to your portfolio, you are hedged against inflation to that extent. Now, commodities also suit the human psyche, because if you see, our forefathers have always been investing in land and gold. Why? Because you can touch it, feel it, see it, keep it. So that is why people want to invest in commodities. But the earlier problem was that commodities were very bulky and very troublesome to store. Gold is fine, it's a high value item. But what about if you buy silver, or if you buy other base metals or agri products or whatever? So you could not store it in your house. Imagine a truckload of commodities landing up at your doorstep if you buy it on the exchange. Not possible. So what we did is commodity markets have been financialized. What that means is that now the commodities are kept in the warehouse. Against that, there is a warehouse receipt issued, which is destroyed, And against that, an electronic balance is created, which you can trade in demat mode. Like in your equities, earlier you had physical share certificates in the 90s, but then the physical share certificates were destroyed and you got demat balances. Ever since that, due to the financialization of equities and bonds, you saw the volumes jump up dramatically. Similarly, in commodities also you can do it. So for example, if you want to buy gold, you can buy gold in physical form, you can buy in demat form, and even if you buy in demat form, you can sell it back in demat form or convert it into physical form. So you can rematerialize it also. So that is the advantage now, where you have the best of both worlds. You can take physical delivery or you can have demat delivery in commodities. So you have tangibility and you have financialization of the commodities. This is especially important now. We are seeing a lot of participation, increasing deliveries on our exchange platform. And for those who don't want deliveries, we always have the cash settled products, especially like the index futures we've launched now. Now, commodities also help. You're surrounded by commodities wherever you are, where you're sitting, what you're wearing, what you eat, the house you stay in, the car you drive, everything is made of commodities. So commodities are a raw material for economic activity, and nations have been built and wars have been fought over them. Almost all the wars you can recall in history, whatever reason may have been assigned to it, but mainly they were fought over commodities. So ideally, you should definitely have commodities in your portfolio as an asset class. Now I will touch upon the index futures. So what we have done is we have gold and silver futures. Now we have combined the two. So on gold, we have a gold index, and on silver, we have a silver index. So the silver index is based on the silver future contracts. The gold is based on the gold index is based on the gold futures contracts. We combine the two and you get a Bullion index. So I'll go step by step. You have the futures. Based on the futures, you have the index, the individual gold and silver indices, and combining the two in a 70-30 ratio approximately, you have, so gold 70, silver 30, you have the Bullion index. Now, based on that Bullion index, we've launched the Bullion index futures. It's a very simple product. Ideally, it's very easy to trade. It's cash settled. So like you trade Nifty or Bank Nifty, you can trade a Bullion index, which we call the BULLDEX. It has a lot size of 50, which means that the total lot value is around 7.5, 8 lakh rupees, as compared to the underlying, which is the silver 30 kg contract and the gold 1 kg contract. You would have to take an exposure of roughly 70 lakhs, because if you bought 1 kg of gold and 30 kgs of silver, it cost you 50 and 20 lakhs each approximately. So instead of an exposure of 70 lakhs, you can get the same flavor at an exposure of 7.5 or 8 lakh rupees. And the margin works out to be roughly 1.25 lakh rupees. So in that sense, it's a much more accessible product to and for retail investors. And the beauty is that if you want to hedge purely or you want to trade, you can trade these products. You can hold the position till the last minute. There are no extra margins in the delivery period or anything of that sort. So, and there's no threat of delivery, you being saddled with delivery. So you can even do an expiry play. The tick size is 1 rupee, and these trade basis the underlying futures of gold and silver. So ideally, it's a very good product for you to look at. I would recommend that you please look at this product, understand it, and definitely trade if you like this product. It is based on 75, the weightage is based 75% on liquidity and 25% based on market size. And these contracts will expire 7 days before the expiry of the underlying futures, because 5 days prior to expiry of the underlying futures, the delivery period sets in. So 2 days prior to that, these contracts will expire. So at any point in time, you will never have to face the threat of delivery. Another advantage of these products is that these are monthly settled contracts, whereas gold and silver underlying contracts are bi-monthly contracts. So you can get these contracts settled monthly. So again, for people having a shorter time horizon, you can take this exposure to this contract. And even if you have a longer time horizon, at any point in time, you'll have 3 contracts available. So you can trade the next month or the farm month. So very nice product, great product to which we've launched thanks to SEBI. And very soon we'll be also coming out with a metal DEX. So the metal DEX will consist of our 5 base metal contracts, which is aluminum, lead, zinc, copper, and nickel. And these also will be in certain ratios. and you can take an exposure on all 5 metals at once in the metal dex. And metals are generally supposed to be, the signals for economic downturn or recovery. So whatever, if you feel that there's economic recovery, you can go long. If you feel economy is going to contract, you can go short. So depending on your view, you can take a view, but basically you can have exposure to all 5 metals rather than, have 5 different exposures and then keep track of all them individually. So there again, in October, we plan to launch this metal dex. So would request you to look at our Bullion Index, the Bulldex, as well as the metal dex, and actively participate in it. Thank you so much. It's been a pleasure to address you all, and good day to you. Thanks, Muthappa. Over to you.
Thank you, Rishi.
Thank you, Rishi sir. It was nice to have you here. Now we would like to basically have Mr. Tejas Kode with us, who is the co-founder and CEO. I think he doesn't need introduction as such. He's anyways the boss of FYERS. I know Tejas as a young boy, and we have a wonderful relationship for almost around 10 years. Just to give a small brief about Tejas, at the age of 16, he was hooked on to the stock markets when accidentally stumbling upon it on television. So whatever he saw, he believed and he did it. So ever since he's been a passionate creature of the markets, professional trading, investing, and decoding the inside world of finance. After experiencing back-to-back disappointments with various stock brokerages, Tejas embarked upon a journey to solve the problems faced by the traders and investors in India. Now, I would like to invite Tejas and speak a few words. And after that, we'll have Mr. Abhishek Chinchalkar, who is the head of education from FYERS. He'll also be giving you some knowledge if he has something on the technical aspects of it. Over to you, Tejas.
Hey, thanks.
Yeah.
So hi everyone. Here back again in a webinar after a very long time. We were really happy that Rishi came and introduced the commodities, the contract. And of course, Muthappa has done this before as well. According to me, this initiative by MCX is really amazing because from a broker standpoint, what had happened is that over the years, like the RMS has become more and more difficult for us because everything became, after SEBI made the compulsory delivery for all commodities, not all, but for precious metals and stuff. Well, in the final week of the contract closing, we needed to kind of ask clients to roll over to avoid compulsory staggered delivery of the contracts, and maybe above 99% of all traders don't really want to take delivery of the contracts. So from that standpoint, they've taken up the initiative based on brokers' feedback to actually launch cash settled contracts for precious metals, because precious metals is quite popular on MCX. So at FYERS, while we cater to all the active traders, we have noticed that majority of the volumes do come from equities and currencies and so on. And commodities has been picking up quite a lot. Of course, up until the whole crude debacle a while ago. And yeah, just the way things unfolded in 2020. But this actually, the precious metals contract, the index contract, holds a lot of promise for all traders, primarily because from a risk management standpoint, it's much easier when you are in a position, you are not kind of like, when you are in a position, you don't really know when the position is going to go in your favor. You want to have the flexibility to hold on to your trades. And what used to generally happen in all these physically settled contracts is that the rollover needed to happen much earlier. And it of course caused problems, and volumes did go down a bit. But with this, I think that's not an issue, because the split between gold and silver, like Rishi mentioned, is 2/3 to 1/3, 70-30 approximately. And that actually works in the favor of traders, because that's how the split between gold and silver trading is on an approximate basis. So what's the main problem then? Why aren't people really taking this BULLDEX so seriously? Firstly, it's very new, and the thing is, I think we need to do more to educate people about awareness. There is a lack of awareness when it comes to commodities. And over the last 1 year, MCX has actually taken this up very seriously, and they are very forthcoming when it comes to like increasing awareness about their products. And it's helped us, and certainly it will help increase the volumes on the exchange. So here are some of the things that I want to talk about as well, right? So from our end, what we've done to increase awareness on commodities is that Abhishek from our team and just the entire team at FYERS is trying to increase awareness about commodities, and we'll put it in the chat box over here. If you want to learn about commodities from scratch and all the things that go into understanding what makes them really move, then you should definitely go through our education initiative, School of Stocks. Well, we've called it School of Stocks because generally that's how people relate to trading and investing. It's so yeah, but it is not restricted to stocks. It covers all asset classes, and in fact, we have covered commodities extensively. You should definitely check that out. So another thing, right? Like, I think the way MCX has planned this is that if precious metals contracts, in specific the index contract on precious metals, if that does well, the base metal contracts will come in soon. And beyond that, I think things will get better. Also, the margin requirements for BULLDEX is lesser than as compared to, say, a large contract on gold. It's slightly more than gold M and slightly like around the ballpark figure as silver M. But I think a lot of the volumes from the guys who traded in the gold and silver large contracts can definitely find value here. Volumes are picking up. Well, right now, I think there's around 200 crores of volumes on the exchange, if I'm wrong. Is that right, Muthappa?
Yeah. I mean, average, I think we are doing around 250 to 300 crores every day.
Yeah, so I think the average has gone down because we took like a simple average from day one. So yeah, we're doing great volumes. OI is increasing, and the number of trades as well, right? We see a steady up move over there.
Yeah.
So I think this is an amazing contract because you only need like 80,000 rupees as margin. This is considering the fact that gold has moved up significantly in the last few months. And yeah, so what we want to do is to promote trading in this particular contract. FYERS will actually waive off brokerage for the next 3 months up until December 31st for BULLDEX, just as a token of incentive for those who want to get into this, as even just to experiment with it and to see how it really works. So yeah, I've been trying to trade it on and off whenever I find time. And yeah, so from the last month and now, we have seen a little bit of an uptake in volume. And but yeah, see, the thing is, right now, most of the volumes are totally concentrated in the near month contracts. The next and far month contracts are still like basically illiquid. But yes, it's just getting started. And I really wish MCX all the best. And I think Abhishek will take you over if you want to know other details in the Q&A session. Thanks. And thanks, Muthappa.
Thanks. Yeah. Thanks, Tejas. I think Abhishek, you can chip in something here.
Yeah. I would again like to add from an asset perspective. I've been tracking commodities quite a lot since the start of my career, and precious metals is something that has interested me quite a bit. Number one is because precious metals are one of the most sought after asset class in the world, especially gold. Historically, it has been proven that gold is an excellent diversifier in a portfolio, and it tends to do very well during periods of financial market turbulence and heightened volatility. You look at the long-term chart of gold, and you will see that it is trended steadily higher. Of course, there has been turbulence during this secular up move in gold, but that again, that hasn't sustained for a significant period of time. And generally, if you see, gold as an asset class tends to head steadily higher. Uh, an even bigger advantage when you talk about India in particular is the benefit that you get from the rupee. If you look at the long-term chart of rupee, the dollar rupee has steadily headed higher over the past 12 to 15 years. And that has been one of the main reasons why gold priced in rupee terms has significantly outperformed gold that is priced in dollar terms. So when you talk about investing in gold from an Indian perspective, it's a very win-win type situation, especially if you focus from a long-term perspective, and especially if you consider gold as an important part in your portfolio. So the index that the MCX has launched recently is a great initiative. Number one, as Muttappa sir said, the lot sizes are relatively small. So for instance, if you talk about MCX, gold futures and silver futures, you need the contract size is approximately 75 lakhs. Whereas if you talk about the Bulldex, it's just around 7 to 8 lakhs. So the lot sizes are quite small. Then the contracts are settled monthly, and there are no worries about being marked for delivery and such stuff. So overall, I feel this is a very great asset class to be in, and especially if you're a medium term or say long term investor, or even if you're a trader, then participating in the Bullion Index, I see there as being great opportunities to make steady capital appreciation over time. Also, if you look at the recent price trends of gold, it has been trending northwards over the past couple of years. In rupee terms, gold has nearly doubled in just over 2 years. So the metal has done very well. So overall, I say that the timing when the exchange is launched, the Buldex index is also very appropriate. So it would be a great portfolio diversifier that you should consider keeping in your portfolio. From our end, we have been focusing a lot on commodities over the past few weeks. We have been increasing awareness about why commodities as an asset class is very important. Number one is that commodities have a relatively low correlation with equities and bonds. They tend to do very well when equities and bonds are not performing very well. Of course, the current period is a kind of exception to this because there is ample liquidity around the world, because of which money is going into all asset class. But historically, if you look at the long-term correlation between equities, commodities, and bonds, you will see that commodities usually share a low correlation with these traditional financial asset classes. And within commodities, we have been kind of increasing awareness significantly by contributing in our knowledge and education initiative, which is the School of Stocks. We have been writing a lot on commodities to increase awareness about trading and investing commodities. And we have also been doing regular videos on commodities so that people are aware about, uh, commodities when it comes to trading and investing. So from our end, we have been doing quite a lot of stuff over the past few months. and going forward, we will continue, increasing awareness about commodities in general and contributing a lot to this ecosystem. So yeah, so Muttappa sir.
Yeah.
So I'd like
Yeah.
to address a
Yeah.
few queries also. I see there are a few questions that are.
Yeah. We'll. Anyways, the floor is open for the Q&A session. So Mr. Nathani had to leave because he had an urgent.
I'm here.
Okay. You're there. Okay. Sorry. Okay.
I can
Well, yeah.
do what-
Any questions? No, that is there. You could always put it forward.
So do you want me to read it out?
Yeah, so
Or
I
you do
see
it?
some questions. One is spread is the main issue, 5-point minimum loss in case I exit with market order. So right now, bid ask in the Bullex is around 3 to 4 rupees on most of the day. So 3 to 4 rupees spread in Bullex is not very bad. It's a pretty good spread to trade. And the break-even point of any contract is two ticks. So that is 2 rupees you can break even. So naturally, I mean, you can put a price order instead of a market order, and I'm sure that you should get an opportunity to get it executed. So I don't think so. In gold, ideally the bid ask is around 8 rupees in a gold contract. In the silver contract, it's 15 rupees. So in the Bullex, if it is 4 rupees, I think it's a great bid ask to trade in. The next question is that this lady is asking that I am a beginner in equity markets, but also interested in MCX. But I have no knowledge about MCX. In equity markets, we do technical analysis. Do we do the same type of analysis in MCX? So, madam, technical analysis works on all asset classes, whether it's commodities, currencies, equities, bonds, everything. So I'm sure if you do your analysis properly, you'll be able to trade in any market, including commodity markets. In equity markets, are there also such patterns like equity in MCX? So I think the basic laws of technical analysis, whether you're doing candlesticks or line graphs or you're using various tools, they all remain the same. So basically you need a traded price, and based on that traded price, you do technical analysis. So the underlying could be any asset class, not necessarily equities. So I think you're safe there. You can do your analysis properly and trade these markets. These were the 3 questions I saw. Are there any other questions?
But there are actually a lot of questions in the chat box.
I just saw the chat box only. I mean, maybe I'm seeing something else. Can someone read them out to me? And
Right.
Venkatesh has asked the minimum investment to trade in MCX. So that depends on what contract you're taking exposure on. And accordingly, the margin will be there. So depends on each contract. So we have, like in gold, we have 1 kg contract right down to 1 gram contract. So the margin will be very different accordingly. Would request if someone can read out any other questions which I'm not being able to see.
Yeah, just hold on.
I guess one is hedging in the Bullex. So one question is, I guess, how to hedge in Bullex, if I'm not wrong.
Yeah, okay. So hedging in Bullex is pretty simple. If you have an exposure to gold and silver, you can sell equal amount and hedge it. If you have an exposure to the underlying contracts, you can hedge it while taking exposure in Bullex. Or if you want to buy gold and silver instead of taking delivery, you can buy Bullex. So there are various strategies by which you can hedge in Bullex, like you would do. So there's like you would do in futures, but there's an advantage here that you could also do the hedging between the futures and the Bullex.
Great.
So yeah, up until other questions come up, I want to ask you, Rishi, what is the roadmap with the other gold and silver contracts? Because in precious metals, there are just so many contracts right now. What should traders
Yes.
need to do?
See, so it all depends. Like the 1 gram contract in gold is ideally designed for investors who want to do an SIP. So if you want to do an SIP, it's a bi-monthly contract. If you do a weekly SIP of 1 gram, which would cost you around 5,000 plus, then in a month you have 4 grams. In a year, you would, in a bi-monthly contract, you'd have 8 grams, and in a year, you'd have 96 grams. So ideally, it's a good way to accumulate gold and silver. I mean, ideally gold. And if you do an SIP for roughly 10 years and top it up with 4 grams every year, you have a kg of gold in 10 years. And then you can keep it in demat. You don't need to take delivery. If you need delivery, you can take the delivery from the exchange, and thereafter you can use it for whatever purpose you want. So suppose you need it for your children, you start doing this SIP when they're young. By the time they're ready for marriage, you will have enough gold to marry them off. If you plan to invest for your retirement or something, you can continue your SIP and keep it in demat. No need to take delivery. So 1 gram is generally designed around that. The 8 gram contract is also generally designed around people who want to take gold guinea coins. The 100 gram and 1 kg is generally designed for people who want hedge or want to take delivery, but mainly the 1 kg contract is for hedgers, traders, and the jewelers who want to hedge the exposure, give and take delivery. The physical market participants also are very strong on the delivery side.
So here's the thing. Since we represent active retail traders, many of them trade, most of them trade in intraday and in the short term. So with the new SEBI norms coming in with upfront collection of margins, they will need to put up a lot of money upfront for futures contracts. Now, if the guys who are trading in gold M and gold silver, both of which take approximately 50,000 as upfront margins, that is kind of an entry barrier for if they want to trade BULLDEX, because BULLDEX requires approximately 80,000. How do you think retail traders should be dealing with these things?
So commodities, ideally, if you see that commodities, the margins, except for crude oil, which now they've gone up, but earlier they were pretty low because of the lower contract size. But commodities, normally the margins will be there because of the size of the contract. Like the gold is a 50 lakh contract, 1 kg contract. So if you have a 50 lakh contract, naturally the margins will be commensurate to that. So here also, if you have a contract of BULLDEX of around 8 lakh rupees, then the margin around a 10%, 12% margin of around a lakh rupees will be there. Now, if you really are a retail trader, I mean a small retail trader, then ideally you should be trading the 8 gram contract and the kg contract in silver, because the kg contract, so in silver we have 30 kgs, 5 kgs and 1 kg. So you can trade the 1 kg contract in silver, which the value will be around, the 1 kg contract itself, the value is around 68, 70,000. And the margin there will be 7,000, 8,000. So it's an ideal retail product. In gold also, you can trade the 8 gram contract. So there
Right.
also, yeah.
So do you have any plans of introducing options for the commodity index contracts for the indices?
So that would be a natural progression, I believe, but not now, because now we want index futures to stabilize. Once they stabilize and we see enough volumes, then we will approach the regulator for options on indices, which is, I think, a few years away right now, because unless we get liquidity and unless we get enough of action in the index futures, we will not see much traction in terms of permissions also for the options on indices.
Well, see, because that's one of the biggest hindrance for retail traders right now. And I've been getting questions on social media by the hundreds. We even run an active community, and a lot of people have been asking me the same thing. How do retail traders cope with the upfront collection of margins? And smaller contract sizes certainly help, but BULLDEX is a new contract. Is there any chance or hope that the contract size or the margin requirements can go down further from this? Just to kind of help volumes pick up a bit, or anything that retail traders can do to maneuver their trades? I think we lost Rishi again.
Yeah. Mr. Adani is there?
I think we lost him.
Yeah.
Right.
Okay.
I think he's back.
He's back.
Well, so basically the conversation I'm initiating here is,
Sorry, Tejas, again
Yeah.
got disconnected. So you were asking about retail.
yeah, so we represent retail traders, right? And a lot of them have been writing to me personally on my social handles everywhere, stating that the retail trader is being cornered. He is not able to trade, and because SEBI is coming down heavy by limiting brokers' ability to give leverage. Of course, the implementation is going to be in a staggered manner, December 1st onwards, all the way up to August. But 2021, mid 2021 onwards, the margin requirements are going to be significantly higher. So there is still approximately like 11 month, it's 11 months away until intraday is going to be completely taken away. So until then, of course, brokers like us will continue to offer execution algos such as bracket orders, cover orders, and a little bit of leverage on the intraday side. But in the medium term, how do retail traders deal with this? Do you recommend that they bring in more capital and that it is better that the margin requirements are going higher?
So I believe that the regulator, whatever it has done it is in its own wisdom, in the sense that it will prevent over leveraging in the market. So a retail investor would, so there's a very fine line between someone trading and wanting more leverage to do a smart trade and someone over trading. So mainly it's to protect investors that you don't overtrade. So ideally you can bring in collateral. You don't need to bring cash only. You can pledge securities and you can bring in collateral in that form. So the idea is that you can only take exposure to the extent you can afford, right? So I think, why like I've been in the markets since 92, and I've seen so many regulations coming in, and every time people say it's the end of the market. When the market emerges stronger, volumes are larger, and the market becomes more organized and safe for everyone. So I believe that while this may be painful, but it will help in the long term, in the sense of making markets less risky for investors.
Yeah, just another question that I have here, Rishi, is there a lot of people, you brought up pledged securities. People can pledge their securities and use that as collateral margins to trade. Most of them do, while most of them do it on NSE, could you please throw some light on how, what the approved list of securities are that MCX accepts as collateral and so on?
So the approved list of securities, if you want, Muttappa can share the list with you, but it is more or less similar to what the other exchanges do, like equity markets. And the process is also very similar. So you can pledge. Here, the advantage is you can even pledge commodities. So you can give cash, you can give commodities. So for example, you're buying gold in DMAT, you can pledge that against margins, or you can take exposure. I mean, you can take margin in terms of shares. You can give shares as margin.
Awesome. So I guess there are not too many new questions.
So Tejas, if you don't mind now, I have to move out because there's another event, another meeting with some ministry. So if that's okay, thank you so much. Everyone, Tejas, thank you.
Thanks for giving us a show.
Thank you,
It was
sir.
a pleasure having you.
Thanks to all the attendees here. Have a great day ahead. Take care of yourselves and your families. Be safe and trade with knowledge. Thank you.
Thank you, Rishi sir. Yeah.
So yes, if anybody has any questions, please do ask us in the Q&A box. We are here to clarify them.
Absolutely.
Yeah. Right. Okay, this is from Abhishek to all panelists. So not too many questions. Right. So what we will be doing is Abhishek will be doing regular webinars on commodities, and as and when you come up with, if you have doubts, We can even do webinars on specific commodities. We can cover base metals separately. We can cover BULLDEX separately. We can do maybe gold and silver, crude separately. So we're here to promote MCX's products, and yeah, I think we'll do our best to increase awareness in this area. So with that said, I think that's it from my end.
Yeah. Now I think if there are any more apprehensions about this, you can always put a mail and Tejas, I'll be sending you the list of securities which would be.
Yeah, that will be very helpful. I don't think too many people are aware of
Can you hear me now?
of pledging securities and using that as collaterals to trade with
Can you hear me
MCX.
now? Tejas?
Not very well. We can hear you, but not very well.
I can't hear you. Hello.
Your voice is low, but we can hear you.
Hello.
Yes, sir.
Yeah. Can you hear me?
Yeah, now it's proper.
Yeah. So what we'll do is that I'll be sending you the list of securities as well as the commodities after haircut. What is the kind of exposure you could be giving? And if you want to do any more sessions, commodity wise, as Tejas mentioned, if you want one session on base metals, we could arrange that. We can have, which will be a detailed session on copper, zinc, nickel, lead, aluminum. Then we can have one with, this energy segment, which consists of crude oil as well as natural gas. Then we can have bullion, gold and silver. Then we can have agriculture commodities like cardamom. We can have cotton. We can have menthol oil, right? Now I think if there are no more questions, I would request Shubham to deliver the vote of thanks.
Yeah, all right. Good evening, guys. So as all good things come to an end, so in life, so the webinar, so on the behalf of FYERS Securities, I take this opportunity to propose a vote of thanks to all attendees. So we found that we think that the session was really knowledgeable and you find out insight about the new product launched by MCX. If you have any queries related to the product or about MCX contract, just let us know on the Twitter, or you can mention them at support@fires.in. With that, we will wind up the session now. So
Thank you.
thank you for attending.
One thing we forgot to mention is that with effect from tomorrow, we will not be charging brokerage for BULLDEX up until 31st of December.
Yeah.
And so we're available on the community to discuss these things. I'll actually start a dedicated thread for BULLDEX, and we hope to see some interaction from you guys. Thank you.
Yeah. Thanks.
Thank you, guys.
Thank you.
Thank you.
Bye-bye.